Coming to you from the Tar Heel State, this is the Carolina Commercial Real Estate Connection, bringing you industry insights and hot takes from Carolina real estate experts, helping you begin, grow, and scale your commercial real estate portfolio. And now your hosts, Tony Johnson and Cameron Pearson.
Good morning. Today we have the man, the myth, the legend, Ash Patel on our podcast. I'm so excited to have him. Ash has over 10 years experience investing in commercial real estate. He has purchased retail, warehouse, office, industrial, land, mixed use, you name it, he's done it. He's doing some ground up development as well. Today, we're going to get to talk to him and kind of go over, for the most part, how to acquire off-market real estate or find mismarketed real estate. I think it'll be a great dive into that. Ash also has a mastermind. He's on season 3 of his mastermind. He's put together Invest Beyond Multifamily is the name of his company. He is also one of the hosts of the longest running commercial real estate podcast out there called Best Ever Commercial Real Estate Investing Podcast. So we're so happy to have him here today. Ash, thanks for joining us today. Today we have Ash Patel on with us, so we're so excited to have him. Ash, welcome to Carolina Commercial Real Estate Connection.
Hey, Tony, thanks for having me, man. Excited to talk to you.
Yes, sir. We're excited to have you. So Ash, I've known you now for about a year. Personally, I joined your mastermind and met you through that. And it's been a pleasure meeting you. You're a great, genuine person, and I've enjoyed every interaction we've had. For those who don't know you, Ash, could you kind of give a background on yourself?
Yeah. So, born and raised in Jersey, went to school in Indiana, had a 15-year corporate IT career, always had a side hustle throughout that career because I knew I wasn't going to work for somebody forever. And each time I tried to quit my job, the golden handcuffs got tighter and tighter. They'd give me a promotion, a raise, an assistant, a secretary, and I would sell out every time and just take the more money and take the easy way out. And finally, I left my career in 2009 to start an IT consulting company. And that ended up being, out of the fire into the frying pan. A lot of travel, a lot of work, probably the same amount of money, but I was working for myself. So I thought that was the right thing to do. And then I went to my CPA and I said, hey, look, we're both W-2 1099s. What can we do to offset taxes? And my wife and I, when I say we both, and, the CPA just grumbled, didn't even look at me. And he said, if you make it, you got to pay it. And I'm thinking, come on, man, like, really, that's the advice you give? So I started doing research on my own, and I always heard real estate was a great way to offset taxes. Didn't know how the numbers worked. So I figured, let's go buy some real estate. Tony, my first property was a mixed use building in a college town. And here's why I bought it. There was a grocery store that essentially sold a lot of beer to college kids. And there was 4 apartments above that grocery store. So I thought, hey, when that grocery store leases up, I can manage that and have another stream of income. So that was my original intention of getting into real estate. And while I'm there rehabbing the property, I was unclogging a tenant's toilet one weekend, and I look out the window. There was an HVAC company replacing all the rooftop units for the store. So kind of in a panic, I go downstairs and I'm like, hey, what's going on? Excuse me. And the store owner says, well, our AC went out, so we're just going to replace the entire HVAC system. And it blew me away that these college kids are destroying my apartments and the commercial tenants are improving my property. So literally dropped everything that I was doing, shut down the IT company, and went full-time into commercial real estate. And I thought, why would anybody do residential when you have a class of tenants that will improve your property?
Yeah, absolutely. That is the greatest thing about commercial real estate. Even me, when I'm right now leasing my office space, we came in here. I didn't like the flooring the guy was putting. It was a new building, and we haven't been able to find a space to build our own. So we're coming in here. The guy was putting in some junky flooring. I was like, oh my gosh, I don't want my clients to see this. Let me just pay $5,000 and throw in some better flooring if that's okay with you. He's like, oh yeah, that's fine. And then of course we had another 200 amp HVAC panel for the guy because we needed more power in our warehouse. And he says, oh yeah, that's fine. So that's exactly, you're right. That's exactly what happens to these commercial tenants when they go in there. They need extra stuff. They put their money in there to do it.
Yeah, we love tenants like you that put a lot of money into flooring. Look, you've got a beautiful office. So when you leave, if you ever don't renew your lease, it's turnkey. Your landlord will be able to charge more rent to the next tenant, thanks to Tony Johnson.
It's the first time I've actually heard that perspective as well. So it's really enlightening. You're like, wow, that's a good point. I wouldn't even have crossed my mind when I was arguing between the two. So
yeah,
I can't tell you how many examples we have of where we gave tenants a white box or even less than a white box, meaning, unfinished walls, plywood floors. They've gone in and they've transformed these spaces into incredible salons, churches, boutique stores, restaurants. I mean, right now we have a restaurant that the lady's doing a massive build out, building a bar with a cement countertop, running all the plumbing for the soda machines and, the beer dispensers. And it blows me away that these tenants are putting so much money into property they don't own. I mean, it's the equivalent of having your apartment tenant be like, hey, Tony, you mind if I remodel this bathroom for you? That doesn't happen in the residential world, right?
No, not at all. Yeah, they destroy
it.
Yeah.
Yeah, that's completely true. And it's something that when people are looking at it and they jump into real estate and they always want to get into the residential because it's more comfortable. They lived in a house or lived in an apartment, so it's comfortable for them. And unless you're involved in this world, you just don't understand exactly what you're saying. How much when you're dealing with commercial real estate, you're dealing with business professionals as opposed to just somebody that is trying to lease a space and move. They destroyed one, they're jumping to another. These people are putting their life savings into a business and doing everything that they can to survive on that business. And they're putting their heart and soul into this space that you own, that they don't even own. You're exactly right.
Yeah. For all your listeners that want to buy the house down the street so that they can keep an eye on it, it's a recipe for disaster, man, right? It's just, you're one tenant away from losing a year or more of rent. One professional tenant that doesn't want to leave or just destroys your spot. You're not going to claim insurance. You're not going to go after them. You're just taking the hit and losing a year of revenue.
Yeah. Yeah, absolutely. Well, that's great, Ash. So thanks so much for telling us a little bit about yourself. Today, what I think we'd like to kind of focus on with you that I feel like you're a master at is finding deals. It's critical, especially in a market like this where there seems to be no deals. Everyone you talk to, there's no deals out there. You can't find a deal, right? So a lot of times when I sit and Ash has a mastermind that I think I pre-alluded to. And so he'll go through in that mastermind and help us all understand different creative ways to find real estate deals. So Ash, if you could you kind of give the listeners maybe a kind of a quick overview, maybe a strategy or two that not anyone else is doing regularly that somebody could try out in their area and see if it works for them?
Yes. So the real key is finding mismanaged, mismarketed, or mispriced deals. That's it. It's that simple, right? So how do we find mismarketed deals? Here's a strategy that a lot of people probably don't use. Go to bizbuysell.com or talk to your local business brokers. Now, one thing I've learned in over 10 years of doing commercial real estate is that business brokers know very little about commercial real estate, and commercial real estate brokers know very little about buying and selling businesses. So bridge that gap, right? I ended up buying a building that was only advertised on bizbuysell.com. And, this is now one of the hottest markets of Cincinnati. And at the time, all the other bar restaurants on that street were waiting for this building to go on sale. Well, part of my searching was looking at bizbuysell.com, and this building was advertised as a bar restaurant for sale. And oh, by the way, the real estate's included. So that was clearly mismarketed, right? The bar restaurant had been closed for 2 years. There's no value in that. There was value in the liquor license and the real estate, and that's it. So if you get on bizbuysell.com, hit up people that are selling businesses, and especially, you could search by real estate included or real estate for sale as well, and talk to the business owners, because often they think the value is only in their business or only in their building. A good example is another, what was it? I want to say it was another restaurant for sale, and they were selling the building. They didn't realize that there is value in the existing customer base and the name. So you could potentially buy the real estate and sell the business to somebody else, right? So now you're coming in, the seller's getting one price, but you've got an operator, so you're not stuck running a restaurant. You're a commercial real estate landlord, right? And these people are not getting hit up by wholesalers and brokers, and they're kind of under the radar because they're mismarketed, right? The classic one, Tony, is residential realtors posting commercial deals. I can't tell you how many incredible deals that I've gotten that were mispriced, because often, if you ask a commercial broker to list your house, they're going to laugh. They're going to say, no, not a chance, not what I do. If you ask a residential realtor to list a commercial property, most of them are going to be like, oh my God, I've always wanted to do this. Let's go. Right.
Yep.
I mean, let's just figure it out together. And they often misprice it because their world, they live amongst comps. They're going to look at what the building down the street sold for. They're not going to look at the income difference of the two buildings. They've never been taught cap rate and NOI, right? So finding residential realtors that post commercial deals, and the way you do that is a lot of residential realty sites will have a filter where you could search by land, duplexes, or commercial. If you find a residential realty site that lets you filter by commercial, go to that site, Google the commercial addresses, make sure that they're not advertised on LoopNet and Crexi and CoStar. And if they're only advertised on that residential realty site, you've got a gold mine. Because
Wow.
look, you just hit a well of deals that there's not a lot of eyes on. Right.
Right. Yeah, you're cutting your competition by a quarter, right? Because
Oh,
everybody
yeah.
is looking at LoopNet and Crexi and getting notifications by LoopNet and Crexi every day. So when you find something like this, this can be a gold mine for someone in a market. Especially right now, people are daily, constantly looking and looking and looking. And when they're looking in the wrong spots, they're not seeing anything. So when you're getting these creative spots like you're mentioning, it can open up a whole new world for someone. So that's amazing.
Ash, it's funny too. I've worked with realtors doing the mortgage side for almost 20 years, and you're 100% correct. I know several that have called me to figure out how to do a loan on a commercial property, which of course I don't do. But they're completely lost, but they got the listing and they won't run from it. So that's a great point.
Yeah. And a lot of times it's just, it's the business owner, like you're saying, it'll be someone that owns and operates a business and has the one building. This is their buddy, the realtor. And so this guy's going to really hook it up. He's going to give me a good deal. Maybe he's going to cut his rate by 1%. And even though I'm going to make 300,000 less than I should, it's okay.
Yeah, Tony, I bought a strip mall where the owner was moving to Florida, and his college buddy, was a realtor. And he's like, hey, will you list my house? By the way, I need to sell my strip mall. Oh yeah, we could do that too. Mispriced it by 40%. 40%, right? I bought it for $600,000, sold it for $1 million right away.
Oh my gosh.
I mean, and first mover advantage is also important. So when you're on Crexi and LoopNet, that's okay. You might be able to find deals, but you better have one of the first set of eyes on it, because within an hour, there's going to be hundreds of people that have seen that listing. With these residential realtors, it's the same thing, right? There's going to be other people that know this strategy, and they're going to look at these deals too. So that strip mall that I bought came online Friday night. I did one last search before the end of the day, saw it. It was too late for me to call the realtor because it was after hours. First thing Saturday morning, get a hold of this realtor, executed the contract over the weekend. Everybody else waited till Monday. This realtor got blown up on Monday because, again, a $600,000 strip mall should have been $1 million. And everyone waited till Monday, right? Don't wait. You find a good deal. It's your only mission in life is to get that under contract.
And move quickly.
Yeah.
Absolutely. What are some key factors you consider when you're evaluating these commercial deals? So when you're finding something, what are some creative ways that you can evaluate? So I know a lot of what we talk about is, you want to force value onto a property, right? So what are some ways that you look at a piece of property that you find that you feel like you can force appreciation?
The first thing is cash on cash returns. Any investment, whether it's a startup, a business, or real estate, the biggest metric is cash on cash return. We all have a finite amount of cash, right? So we've got to make sure we deploy it and get the highest return for it. And even if you're raising capital, you want to make sure the return is as good as can be. Now, the benchmark for that is 20% for me. Typically, it's gone down a little bit. And the way that came about was, in the mid 2015, 16, I started investing passively in apartment deals with Joe Fairless. And his returns were about 20% annualized upon sale. So I said to myself, look, if I can make 20% passively, I better be making a lot more if I'm putting in the work, right? So that's the first thing I look at is cash on cash return. The other part of your question in forcing appreciation is what kind of value add is there? Are the rents below market? Are there vacancies that I'm confident I can fill? And when I say I'm confident, I've test marketed while I'm in due diligence, right? And I've gotten some responses. I've learned the market. I know that there's not a lot of surrounding vacancy. So I'm confident that I can fill vacancies, increase rents, and just make the asset more suitable for a higher price sale.
That's awesome. So just a couple things to circle back for people that don't know. So if someone doesn't know how to calculate a cash on cash return or how to evaluate what their cash on cash return is, what's a simple metric for someone to do when they want to calculate that for themselves?
It's look at your net income at the end of the year. And that includes all your mortgage payments, all your debt service, all your taxes, all your insurance, all of your expenses, right? And you divide that number by your down payment. So if you net $20,000 on a property after everything, right? After every little expense, taxes, mortgage, at the end of the day, your bank account increases by $20,000 at the end of the year, and you put $100,000 down to buy this property, that's a 20% cash on cash return, right?
Absolutely. Perfect. Okay. The other thing that you mentioned that I think we'd probably want to think about a way that you would do that is when you say you find a piece and you have a plan for leasing it out and you test it. What do you mean by that? Can you explain that to someone who's never done that before?
Yeah. So a good example is we had a flex space in one of the suburbs of Atlanta, and it looked to be underpriced, but it was 50% vacant, right? So
Right.
we can't just buy it hoping that we fill the rest of the vacancy at the rent that we assume we're going to get. So during due diligence, and I think we got 45 or 60 days of due diligence, we started marketing it, right? We put it online, Facebook Marketplace, Craigslist, got onto that local towns page, started pitching it, and then put a for rent sign in front of the building as well. And we got some traction. So we knew that we'd be able to fill the vacancy and we were okay to close. But if it was all crickets and nobody, called us and inquired about the price or the square footage, that could be a problem. And especially in a market we don't know.
Yeah, that is a very good way to look at something, especially when you're looking at something like you do with value add, you have to have a plan of action, right? When you're going into these things, because it's difficult. One, so you have to get the bank to buy in that you have a plan of action in order to get this property up to what you're projecting, right? And testing it out under your due diligence gives you a good free look, basically, at if you think it's really going to work on your plan. So that's
Yeah,
a great way to do it.
we don't roll the dice, right? We don't lose money. So there better be a positive, actionable plan of making money. It's not hopes and dreams, man. There's got to be evidence that this deal is going to work.
Yeah, that's awesome. So going back on that, so let's say we're working one of these deals. What are some creative deal structures you've put together in the past? I know, right now it's a lot of these, and traditionally with these value adds, it's already difficult, right? So you've got to kind of find some way to make it work, because typically, if you're new to this, a lender's not going to loan on a lot of these spaces. If a 50% vacant strip center, they're not going to do that. So you have to find some creative way to make the deal work. Could you give us some one or two visuals on or ideas of what you've done that was creative in the past that we could try and think about trying out ourselves?
Yes, you can do master lease options, right? So if you know that a property is just not attractive to a lender and you're probably not going to get a loan on it, do a lease option to buy. So for 1 year, hey, I'm going to lease this property. And hey, seller, the worst thing that's going to happen is I walk away from it. But by then, I would have already put money into the property. I would have filled some of your vacancies, right? So it's kind of a win-win. And a year later, you go back to the lender and you say, hey, look, we're, only 30% vacant now. Let's get this loan going. Another creative strategy. Man, good question.
Well, that's great because, just understanding that. So from the seller's perspective, when you're doing that, they get a good buy-in, because you might go in and spend $200,000 on getting these spaces, maybe vanilla boxing out a couple of these, demoing, clearing out the space and getting them ready for lease. And he's still guaranteed to get the same income he's already generating, plus you're adding value to the property. So for him, it's a win-win. If it doesn't work, hey, you've just fixed a bunch of problems he's got, makes it easier for him to lease. And if you do get, let's say 20%, like you said, leased up, it makes it way more attractive for the bank. And now you've shown that you've got your plan of action that you presented to them. You're implementing a portion of it, so they're more likely to lend on it.
Yeah, and you've also locked in the price a year earlier. So any
Yes.
growth there, you've already, you kind of blocked anybody else from being able to move in on the spot.
Yeah, it's another way to hedge your loss.
Yeah.
And protect yourself. So
That's good stuff.
A couple more creative
Yeah.
strategies. I sold a building to, it was actually my very first building that I bought, the college, mixed use building. I wanted to sell it because I hated dealing with the apartments. So put it online, had a broker, just people are lowballing me, right? And I ended up selling it to the store owner. And the reason for that is it's worth more to him than anybody else, because if he ends up buying the building, he's essentially living there rent free, or not living there, but operating a store rent free. So he was paying, let's say, $2,300 a month, right? And he would have paid that forever. But if he overpays me for the building and buys it, the mortgage payment is paid for by the for residential tenants, right? So if you can ever sell a building to one of your tenants, it's the highest and best use, because they're willing to overpay. And I've done that 2 or 3 more times as well. And
plus you might save on broker fees as well, right? So
you're 100% right. Yeah. I got way over market because, again, what a win-win, right? They're no longer paying rent. They own the building and they're collecting rent from other tenants, whether it's other commercial or residential tenants. And they're willing to pay a lot more money as long as the numbers work for them.
Yeah, that's great.
Yeah, that's awesome.
I'm going to ramble. I'm going to answer one more one more example.
Okay.
This was a $1 million lake house that I bought for about $400,000. Let me take that back. It was about an $800,000 lake house that I bought for $420,000. And when I was negotiating the price for this, the realtor said, look, they just inherited this house. They don't have enough money to keep the lights on or keep the gas bill going. So immediately knew that that was a pain point, right? I said, look, I'll wire them $2,000 today. They'll have that in their bank account today. And if they sign the contract, have them sign the contract, right? So I eliminated their pain point, underpaid, sold the property for $620,000 a month later. So a $200,000 profit by addressing a pain point. Everybody else, would have gotten it under contract. They might have gotten more money, but they're not going to see their money for 45 days, right?
Yeah. which doesn't help them at all. So that is a good way to look at it. So one thing that's happening right now, everyone's getting deals are underwriting because of the interest rate going up. So you have to get somehow creative to make deals work. And there's such a gap in asking price and what people can pay because of that interest rate gap. And, I know there is the idea from a lot of people that the interest rates are already topped out and are going to jump back down. Do you have any specific thoughts on the interest rates and the future of where everything is going?
I'll give you my opinion. And that is, it's only real estate people and Wall Street people that think rates are coming down. Everybody else is realistic, right? In my opinion, the Fed started this they started increasing rates to inflict pain in the economy, take away all the money sitting on the sidelines and kill jobs. Every time the jobs reports comes out and we've added $300,000 jobs, it's a problem for the Fed, right? I don't understand why they paused. They should have gone harder because everything's priced into the market. Stock markets are almost at an all-time high again. So whatever the Fed set out to do didn't work. I think they're going to have to come back hard, raise it 50 basis points to really shock the markets.
Yeah, I do too. So if, let's say it's going up, then we have the, I don't know what it is. Is it $20 trillion of commercial debt that's going to come due in the next year and a half? I think is that right?
I think it's 1.5 trillion
1.5
in the next
trillion.
year or so.
Next year or
which
so.
is insane. Which is insane.
So, what are your thoughts on that? How are you looking to seize on that opportunity? And do you feel like it's just office and multifamily that's going to be mostly affected, or do you think it's going to be across the board?
So multifamily is already getting slaughtered, right? If anybody was delusional, it was the entire multifamily syndication group out there. I mean, all these guys and girls always believe the arrow goes up and to the right forever. And again, anybody under the age of 33 has never seen a down economy, right? They've only seen prosperous times. So multifamily, the reason it's getting hurt bad is because a lot of them did bridge loans, interest-only loans, variable rate interest, right? Now, when we do our value-add commercial deals, everything's locked in for 5 or 10 years, right? We might have interest only for a year, but even that interest only period is set. And when that expires, the remainder of the loan is already set the day you sign the papers. So we never operate on interest only loans. So multifamily, go ahead.
I want to slow down for a second. So for people that don't understand bridge loans, and could you explain bridge loans and for anybody who might not understand that?
Yeah. So when you're buying a $20 million apartment complex, the numbers don't work if you get conventional financing, 25-year, 30-year loans, right? They just don't work. So what they do is they say, hey, look, I'm going to do a 3-year bridge loan or interest-only loan. It's the same thing. So for 3 years, I'm only going to pay the interest payments on this loan. So it reduces my expenses every month, every year. And during those 3 years, I'll renovate these apartments, I'll increase rents, and cap rates have historically compressed in multifamily for many, many years. So this asset, even if I just hold it, is going to be worth more, right? Even if I don't do anything. And that occurred for 10 years. People rode that wave until the wave crashed, right? And now your debt service on that $20 million loan could be 3 or 4 times what it was, right? Because of rates going up. So we have a lot of people in the multifamily industry that are pausing distributions to investors. They're doing capital calls, or they're just simply walking away from the deal because there's no way to salvage it. Right.
Yeah, leaving so many investors in a bad spot. And not only with that bridge loan that's interest only and it's going to come back due. So they've done that 3-year bridge loan. But as you said about cap rates, but the cap rates that were compressing, now are expanding.
Right.
So not only did they have that interest only and the value didn't go up and maybe your rents aren't even going up anymore, right? They've kind of stabilized. So, but you'll having to refinance, you might have to bring $4, $5, $6 million to the table to refinance it because it's not worth what you paid for it because the cap rate's expanded, right?
You're right. And let's be clear that those bridge loans are not set for 3 years. Every month, that interest rate is variable. So month over month, your payments can be, they not can be, they are
I've heard of some of
increasing
them three
every
hundred
month.
thousand, $400,000 a month.
Yeah. And then, just so your listeners understand the cap rate decompression, there was people that bought at a 3.5 cap, right? In Phoenix and Florida. And if you go from a 3.5 cap and now the market is at a 5 cap for that same property, I think if you do the math, it's like a 30-40% hit in the value of that property.
Wow.
Yeah.
And that, yeah.
Yeah.
The cap rate. Yeah.
Issue. There were so many people coming in the market the past few years that were completely inexperienced. And, when that wave is going up, everybody looks like they're a pro, so they do a deal, do another deal, and then they just started stacking money and money and money in all these deals. And they'll leave a lot of people in tough spots. So the difference in that and what you're doing is you're controlling what you're doing and you're getting longer term leases as opposed to 1-year leases with residential tenants. You're getting secure tenants. You can force appreciation and it's all longer term leases. It's 5, 7, 10-year leases, a lot of times with corporate guarantees.
You're right. And also we're not bound by comps, right? So if you have a class A, or let's say you have a class B multifamily property, and you're charging $800 a month in rent. Down the street, there's a beautiful new Class A property that's charging $1,100 a month. You can't ever exceed, let's say, $1,000 a month, right? Because everyone will just go to the nicer, newer property. So you're bound by surrounding comps in rent. And if you have an entire market where rents are decreasing, vacancies increasing, there's not much you can do, right? You can't you can renovate it, make your apartment into a palace, but you're only going to get so much more rent. With commercial properties, you could take a block building with a metal roof, and if it's vacant, it's worth maybe $200,000-$300,000. If you sign a 10-year lease with Dollar General, you've added $1.4 million in value by signing
Just
that
from
piece
the
of paper,
lease.
just from the lease.
Yeah.
Right. If you, if you have a mom and pop pizza joint, and all of a sudden Domino's or Pizza Hut comes in and signs the lease for 5 years, you've increased the building the price by about $500,000, right? Literally by getting a better tenant in there, higher rent, lower cap rate. So in commercial, we get to control a lot of that. We're not bound by comps.
Absolutely. So it's important when you're doing these commercials, especially if you're in the retail world, to get involved, network with those retailers, the commercial brokers that have relationships with different retailers to make sure you can place tenants in the high quality tenants, right? The franchises that you can get the corporate guarantees from. That is so helpful and can take a building that might be sold to you at a 9 cap and you can be able to re-tenant it and turn into a 6 cap and make all the money just from re-tenanting the building.
You're right. You're absolutely right. The quality of tenants dictates the cap rate. So imagine having an apartment building and Derek Jeter lives in that. The value of that just went up because everybody's going to want to be there, right?
Yeah, absolutely.
In our world, the Derek Jeters are the Dollar Trees, the TJ Maxxes, all those national tenants.
Yeah, absolutely. And retail right now it seems to be in a really strong position. Retail and industrial flex.
That's kind of what I was going to ask you, Ash, what you thought the next play is going to be, because what's coming down the pipe with the rates and changes in people's loans, being called. Where do you see the next opportunity?
Like what asset?
Yeah, great question. And I never finished. Tony asked about the office as well. So yeah, most of that 1.5 trillion is office space. That's just, we're working from home. We're COVIDized. Working from home, my opinion on that is it's going to be short-lived.
Mhm.
right? A new metric just came out that said everybody that works from home on average works 3.5 hours less than people in the office.
Wow.
Right now, look, when these COVID lockdowns started, people started working from home. Everybody raved, yeah, man, I'm more efficient at home. I get a lot more done at home. And then we got complacent, right? So kids are off for the summer. Are you telling me you're putting in 8 hours a day when your kids are home? It's a nice day out. Tony, I've gone to lunches where you sit outside. And in my corporate career, when I did that, nobody was drinking, right? Every so often you'd see somebody with a beer. And I would think, man, like who gets to drink a beer at noon? Now, on any nice day, you go sit at an outdoor restaurant or cafe, everybody's got a cocktail in front of them. They're taking 2 hour lunches. And these are all people working from home, right? So look, JP Morgan, Facebook, Google, all these companies or Disney are saying, okay, enough of this working from home. You guys are coming back to the office. And that's going to happen, right? We've had an equilibrium offset where the supply and demand with employees and employers was in favor of employees. So college kids were coming out of college and saying, hey, look, I'd love to take this job, but man, I'm going to work 4 days a week. And also I'm going to work from home. And employers had no choice. They had to oblige that, right? Now the pendulum's swinging back and employers have the upper hand. Layoffs are starting to hit and people are again realizing it's a privilege to have a job. So office space, I think, will come back. It'll be a very, very long time before it comes back to the capacity it was, but the prices will reset too, right?
Yeah,
What I mean by that,
right now they're picking up. I mean, up in some of the bigger cities like New York, I mean, they're 40% off the market highs, and so they're at or below the prices of 2008 and 9 right now. So there's
absolutely.
opportunity there for sure if you can figure out, like you say, if there's some kind of a demand. One thing that's happening in office, and you'd tell me your opinion on this, is when they're forcing them back, a lot of times these offices, they're having to revamp the office and give them amenities in the office to basically draw them back almost.
Yeah, and a lot of times they're having to give them an office, right? So you guys remember in the 90s, it was trendy to knock down walls and everybody work in communal areas. Well, people are realizing it's not efficient. It's hard to work. You can't focus when you have 3 people around you making phone calls. So a lot of the younger people are almost happy to come back to the office, but they want an office, right? And you're right. You've got to entice them. We're still taking baby steps with employees, right? We're coddling them and saying, hey, look, we'll put in a water slide to the lunchroom if you guys come back to work, right? Some silly stuff like that.
For you.
So, but again, these big Wall Street companies and big tech companies, they're not playing around. They're saying, look, you're back in the office or you're out of a job. I don't care that you relocated and didn't tell anybody. You're coming back to work, right? Because they've realized they're losing productivity. They're realizing if their competitors are calling people back in the office, they're going to have an upper hand, right? So look, there's no argument, man. If you're home, you're doing laundry, you're taking lunches, you're hanging out with the kids, taking the dog for a walk. If you're not feeling it, maybe you're working from the couch and not as efficient. TV's on, having lunch with your spouse. You can't tell me you're working more and harder from home.
Yeah, you're absolutely not. When you can't 100% focus on it, even the time that you're working isn't as productive. That's for sure. So looking at office and a potential opportunity with office. So have you seen, or do you have any ideas? I know the offices that we're looking at, that they are trying to get people back. My construction company, we're being called in to do exactly what you said. They want to section them back off and do professional offices. That's the layout everyone's going back to. Do you see any other creative ways to take these offices? A lot of them, people have looked at doing them into multifamily, which doesn't work because typically you'll have plumbing just in the middle of the building, right? And you don't have egress, the windows don't open. So it's very difficult to transition them to multifamily. What are some uses that you've seen or that you think that could be used in some of these office transitions to use the office and take advantage of the discounted prices?
Yeah. And Tony, I want to emphasize what you said, because we have an entire industry of multifamily people that think they can just go in there, convert office to multifamily. You're in the construction business. It's not the easiest thing in the world. In hot markets like Nashville and Phoenix, maybe. But in
Yeah.
most cities, it's not cost effective. So the answer to your question is, if you can pick up office for 20 to 30 cents on the dollar, you've now reset the price, right? So all these Class A office buildings, they have to rent for, let's say, $16, $18 a square foot, or they can't make their mortgage payments. Well, if you can pick up a building for 20 cents on the dollar, which we're getting close to, right? So these buildings are going to auction, and like you said, they're selling for like 30, 40 cents on the dollar. But they're going to come down even further. If you can pick up one of those buildings really cheap, you can now afford to rent out office space at $6, $7, maybe $8 a square foot, and you've reset the price for that area. So anybody looking for office space, they're going to see $14 to $18 a square foot, and all of a sudden you've got a similar class building, and you can give that away for $8 a square foot and be profitable. So the prices will reset. Another part of your question was creative uses. We've done co-working in offices, right? So, I also own a number of office buildings, but small suburban office buildings. Those are on fire. Anybody that's in that market knows there's a waiting list of people wanting to rent suburban office because, like we talked about working from home, people are self-realizing, man, I can't get anything done, especially business owners, right? They realize they can't work from home effectively with all the distractions around them. So they want an office close to home. They don't want to go to a city center. They don't want to drive 30 minutes downtown. They want something within 5 minutes of their house, just a single office. Go there undisturbed, get my stuff done. And if you can find a suburban office building in a walkable suburb with, bars, restaurants, amenities close by, those are absolutely on fire. You'll have no problem renting them out. Co-working is another one. People that may want an office a couple days a week, or they want somewhere to work 2 or 3 days a week, or maybe every day. They don't want to rent an office, but they're okay paying $250 a month for a workspace, right? You go there, one day you sit on the couch, one day you sit on a high top table. And it's just a cool vibe being amongst other people that are working, right? So co-working is another good one.
I think co-working is great for somebody who doesn't understand co-working. Could you explain that? So if you get a co-working, like you just said, you can rent an office $250 a month, which is great for a new business owner, a new business that you've started up that, you can't do out of the house, or you don't want to do out of the house. So you want your own space to have that professional look when you're getting your business going. So what other advantages do you get? Do you get some type of a lounge? What about if you needed to have a conference, or you wanted a meeting, or do you get someone to check them in? How does that work?
Yeah, good question. So co-working in our area in Cincinnati and all the suburbs around here, they start at about $150 to $250 a month. And all that gives you is access to go into the facility anytime you want, right? They have some amenities, most of them have beer and wine all day, coffee, soft drinks. But you just go there, you find an empty seat to work in, whether it's a table, a couch, a high top bar table.
So like a general admission for all month.
Correct. Now, if you want a dedicated office with a door that you can lock and only you have access to it, those are, typically $500 to $800 starting a month, which is not bad, right? And,
Right.
You can go there, you can have guests come in, but you also have access to conference rooms typically. So you can rent or reserve a conference room for meetings. They will often give you a mailing address, so you can have mail delivered there, have a little bit more professional mailing address. They have faxes, copiers, some offer secretarial services as well. But the other cool thing is there's a network, right? I mean, you're there amongst maybe a lot of entrepreneurs, a lot of business owners. It could be some incredible networking that gets done at these co-working centers. And a lot of them will put on networking events, right? Happy hours. It's a great way to meet people, especially if you're an extrovert working from home. Man, how cool would that be, right? Go there whenever you want, hang out, meet some people, get some work done.
The other thing that does for an investor is you get in there, let's say you have a co-working space, you get 20 tenants, right? All those 20 tenants could be springboards to needing a bigger office space down the road, or a bigger, maybe a retail space. So you can use that relationship that you built with them. And then when they want something larger, who are they going to come to? They're going to come to you and say, what else do you have? What can you get me? And what a great way to network yourself and build up some clientele that you don't have to then again pay a real estate agent. They're already coming to you. It's direct, one-to-one. And, wow, what a way to give yourself some leverage to get more clients and give you places that you need to look for clients.
Yeah, that is a great point. I'm glad you brought that up because nobody talks about that. We've literally had office tenants that have then gone on to rent retail space from us as well, right? We've had office tenants that will take up more space. They'll expand. They'll take over a whole floor or, half the building. So yes, that is one of your best sources to get tenants. And also something else that people may not realize is with co-working, it's kind of like a gym membership. You might have 100 people that sign up for a monthly co-working membership. Only 20 are showing up, right?
Yeah.
So, I mean,
But
you can
also,
oversell.
for the tenants, I mean, what a great way to find other, entrepreneurs and network and build your network, right in front of you. And it seems like it's a win-win for everyone involved.
Well, and also it would allow certain buildings that you wouldn't consider to be profitable. All of a sudden now they're back in the game, because if there's a lot of people that don't want 5,000 square feet, but if you get 5,000 and you can put 15 people in there paying $800 a month, I mean, that's better than having one place in 5,000 feet.
Yeah, that's an absolutely great point where, a lot of these older office buildings are set up to where the elevator, it lets you out amongst the whole floor, right? Now you have to find somebody that wants 7,000 square feet because it's hard to subdivide it, right? It's kind of open, whatever. Man, that's ideal for co-working, right? All the offices that you can lock, rent them out as offices. The rest of the common area, throw some bean bags, tables, chairs, conference tables, and that's your co-working spot, right? So yes, a great way to repurpose office.
That is great. It really opens up some options for somebody that's looking for a creative way to do a deal and get into something. And it's a very low cost of entry and low barrier so you have a much larger population that you can gain as tenants, right? Because anybody and everybody is starting businesses and, you're trying to do stuff. There's more of those than anybody. It's hard to find the big, great tenant, but it's easy to find somebody that's looking for 100, 200, 300 square feet, right?
You're absolutely right. Yeah. And again, you can oversell the common memberships, right? Because not everybody's coming every day. So it's like selling an apartment 3 times.
All right. Well, we have to get off here so I can go start working on this right now.
That's right. I didn't make 3 calls. Yeah.
Texting everybody as I'm talking.
But listen, I want to stress this to your listeners. Just call. Every city's got the co-working spaces, right? Call them, tour the facility, and see how much they cost. And then look at facilities that you can buy, and do the same thing, right? The numbers just work.
Wow.
Yeah.
Yeah. That's awesome. Ash, this has been so educational. I know for us, I'm sure for anybody listening is going to just not even know what to do with themselves. They're probably going to take a week off with all the great things they've got to do now. So
work from home.
Yeah. Thanks so much for taking the time out of your day. I know, I am so thankful you've taken the time to join us, and I look forward to maybe doing it again down the road.
Listen, you guys are awesome. What a fun conversation. So thank you. It's an honor to be on here.
It's great to meet you.
All right, Brian. Have a great day, Ash. Thanks so much,
Awesome.
sir.
Thank you.
See you, bud.
Thanks for listening to the Carolina Commercial Real Estate Connection. You're officially one step closer to conquering the market. Be sure to subscribe wherever you heard this podcast so you never miss a future episode. For more information or to connect with Tony and Cameron, check them out online at www.timelessci.com. We'll see you next time.